Good morning, ladies and gentlemen, and welcome to the show on this Tuesday, the 1st of June, 2021. Thank you for tuning in. Hope you guys had a great Memorial Day weekend, long weekend. It was a long weekend here here. It's good to get out and be able to go outside your house, again, and be able to go and do things again. It's starting to. Things are starting to open up a little bit again. That's great. But anyway, listen. The Fed's got some sort of action going on. $485.3 billion reverse repo operation. We're going to talk about that for a little bit. And so let's get the chart started right here. The Fed repo facility sees a record $485.3 billion of overnight demand from Wall Street that's awash in cash. I live here in Canada, so I'm going to use an analogy from a Canadian analogy. Say there's a Canadian city here, and there was a moose running around in the streets. And say the firemen were all after him, and they're trying to throw a net over him or whatever, and he'd constantly escape. So there's an old man sitting on a building watching all this, from up above. He's looking down, watching them, chasing the moose around the streets and everything else. He knows how it's going to end. Even though every time they kind of corner the moose jumps and escapes and whatever, But he knows how it's going to end. He knows it's going to end with the moose being captured and the moose is not going to be in the city anymore. That's how this system is right now. We know how this is going to end. Even though there's all kinds of stuff to avoid the ending, they're doing everything they can. They're doing reverse repo operations, and that's like the moose escaping out from underneath the net. But it ain't going to work in the end. It's going to end a certain way. What's happening is as we advance into this, we're creating more and more pressure on the system with no escape valve. And that pressure, is that we have to keep the system, not we, they have to keep the system running with more and more liquidity. And the end of this game is prices are going to start to go out of control on everything. And right now there's hints that that's coming, but there's this evasion going on. It's almost like the game of silly beggars or whatever, where with the moose is evading capture. It's making it look like we don't know how this is going to end. But we know how this is going to end. They can't let the system sink into deflation, ultimately, because there'd be margin calls go out. Do you know the whole stock market is just full of margin debt? It would go no bid. Can't let that happen. Because they can't let that happen, they couldn't let it happen in 2008. They can't let it happen now. We know how this is all going to end. This is going to end in inflation. The dollar is what's going to take the hit. And so even though we watch this whole theatrical play, let's take a look at silver price today. We watch these theatrics. Look at this big, enormous crash down in the price of silver. Enormous crash downs in the price of cryptocurrencies. Enormous smackdowns in all these asset classes, the only asset classes you can use to hedge against the dollar. Why do you think that is? It's this game of silly beggars that they're playing right now. But we know how this is going to end. You better be invested in assets that are out of the dollar. Take your choice. Take your pick. There's not very many to pick from. There's just cryptocurrencies, gold, silver, and maybe a handful of other metals. That's it. You'd think that with a financial system this vast, there'd be lots of avenues out of the dollar. No, there isn't. They're all in the dollar. Everything, even gold and silver's in the dollar if you buy the paper futures contracts. You're still in the dollar. You got to hedge against the dollar. You got to hedge against what's going to happen. Because, guys, at the end of this story, if you don't hedge, People who are on things like are reliant upon the government, like people that are on Social Security, they're going to watch the amount that can purchase be dwindled month after month. And what do you think this is going to do socially to our as our purchasing power disintegrates, and they just can't keep up with the speed it starts to disintegrate at? Well, our society's going to collapse and disintegrate as well, because everything runs on money. And I'm talking about currency. Everything runs on currency right now. We got a system that runs on currency. It's like we got a train that's going down the track, and it only runs on coal. What do you do when you run out of coal, or the coal stops working? This is the same way with this system. What do you do when the currency stops working properly? Well, you're going to have a disintegration of society, a breakdown in society, which is going to lead to areas. They're going to be able to keep areas up and running, and other areas they're going to have problems with. We're already seeing this moving toward this. So there's a lot you guys got to prepare for. One of the things is you got to hedge against the dollar. And even though it gets smacked, you got to sit there and you got to watch it get smacked until this game of silly beggars ends. Because when this game of silly beggars ends, when the moose is finally captured, and he can't get away, there's no holes in the net, then at that point, you've got to at least have a certain amount of your portfolio in hard, tangible assets. Otherwise, you're just going to get slaughtered. We're heading toward hyperinflation. I'm not going to, a lot of these guys try to mix words and they say, oh, it's going to be massive inflation or whatever, in the end game. Maybe, they say maybe I'm not saying maybe hyperinflation, I'm saying real hyperinflation. Of all of the fiat currencies, they're all going to go down together. And, this is the end of it. Jim Rickards wrote in his book, he says, The Death of Money. This is it. This is very true. This is exactly what's happening. And we're never going to go back to fiat currencies when this is over. Nobody's going to trust them. Nobody's going to trust the government that runs them. So where do you want to be invested? Well, some people say cryptos. We got another group over here saying saying gold and silver. And I say you should think about both. Okay, so we're seeing a smackdown on silver today. 28.05. It's almost down to the $28 mark. It's starting to bounce now. Starting to bounce. Let's take a look at gold. Gold's starting to bounce again, but it's down $10.60 to $18.96. Now, cryptocurrency's taken an awful smack over the last little while, but I think that's almost getting ready to start to turn back again, Terrible smackdown. Accumulation is going on right now. Big money. Big money. The big whales and stuff, the big guys. The big guys are starting to chomp up the Bitcoin at these lower prices, and this is preventing it from going into a capitulation. But here we're seeing the Bitcoin price steadying, now. It's starting to steady in around 37,000. So 36,345 right now. Now we're going to take a look at the Dow Jones today. 34,644. It's up 115 points. You guys, during this game, when they're trying to catch some moose, let's call it the trying to catch some moose game. They're out there running around. During this game, and people don't know whether it's going to be deflation or it's going to be inflation, and nobody knows for sure what's going to happen. And some people are saying buy bonds, and some people are saying store your money away in cash and all this kind of stuff while these games are being played. I know how this is going to end. This is going to end ultimately in inflation because they can't let the system collapse in a deflationary spiral. So ultimately, in the end, the big winner is going to be you and don't get discouraged. And I mean, it's easy to get discouraged when you see prices on the asset classes that are only avenues out of the dollar going down. When you see those prices going down and you're invested in these asset classes, it's awful easy to get discouraged. Don't get discouraged because we know what the end of this is going to be. It's just a question of how long is it going to take. How many times is the moose going to run up and down the street? They're going to throw the net over him and he's going to escape underneath the net and keep running. But we know how it's going to end. Eventually, they're going to catch that moose. Just like the old guy. He's sitting there watching. He says, they'll catch some moose. And he goes back inside and he takes a sip of his coffee. He knows they'll catch some moose in the end. And we know how this is going to end in the end. You know, and it's a lot worse. Right now, it's a lot worse than it was when I first started forecasting on here and telling you guys there's going to be a hyperinflation coming. I thought it would be a lot sooner. I didn't think the moose would escape so many times, you know. I never in my wildest dreams did I think it would run this long, take this long. But I know how it's going to end. See the end picture. Don't get caught up in all this minutia that's going on right now. See the ending of this. And where are you going to be? What are you going to be invested in? And look at each one of these opportunities when the price breaks down on these asset classes like gold, silver, cryptocurrencies. Look at it, take it as a gift from Jamie Dimon, you know, for you. Don't sit there and get depressed about it. Look at it as a gift, because you'll never get that opportunity again. There's going to be huge opportunities coming when this finally breaks, you know. Okay, so now we're looking at the Dow up 130 points. Let's take a look now at crude oil, and it's getting up near that $70 mark I told you guys about. When it gets to 70, then I think it's going to be on its way to 80. 68.51 right now. It's getting almost to 70. It's up $2.19, which is a 3.3% jump, and that's a big jump for crude today. Move index. Move index is dropping. 5204. You can see it's a descending chart, the move index. Let's take a look at the dollar index. Wait, we missed bonds. Here's bonds. We got rising yields today, and this is putting pressure on gold and silver. It's on the 10-year, we're looking at 3.7 basis points, 1.63. That's quite a large jump, and that's probably what's put the pressure on gold and silver today. Also, the 30 years at 2.31, and it's up 4.4%. So those are quite big jumps in yields on the government bonds. Thank you guys for listening to my show. Oh, we got to do the dollar index. Ha 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 ha. Okay, 89.73. So the dollar's just going along sideways today. 89.72. Thank you guys for listening to my show. Like and subscribe. And we'll catch you guys in the very next episode. Bye-bye.